Capital is rotating toward
I
non-optional
probably
systems.
won't hold this up. And I think holding up
Washington
one little page
reopened the
doesn't
money
do
pipes
it
by
justice.
ending the partial shutdown with a
In there, it's a lot
$1.2
of
trillion
stuff, but
funding
it's
package.
signed.
Breaking news right now, speaking of busted pipes, for more than 1 million people across Montgomery and Prince George's County. Right now, everyone who uses WSSC water is being
The West
asked to
faces a hard
only use
water
it for the
scarcity
essentials.
deadline.
Governor Hobbs tells me while she's feeling optimistic about negotiations after that meeting, she says some progress was made, but she does not feel confident that the states are going to be able to come to an agreement.
PFAS compliance stays alive on the legal calendar.
They're called forever chemicals because they break down slowly over time and can build up over time. Now they've been found in our food, drinking water, even in the blood of humans and animals.
And gold and silver volatility reminds everyone what leverage narratives look like when margin rules change.
Buy your gold and silver over the weekend. You know, we've had this big correction. We typically have rallies on Mondays.
Put simply, water equals forced capex, uranium equals strategic supply chain bids, and metals equal monetary hedge under liquidity stress. We stay pro-water, pro-metals, pro-uranium, but we track them by measurable supply, demand, and capital flow, not violence. Markets don't move when the crowd expects them to. They move when pressure builds quietly underneath the surface. This is Quant Trade Talk, where we track capital before it becomes obvious. Capital moves quietly. We move earlier. Quant Trade Talk. Capital moves. We move earlier. Quant Trade Talk.
So I probably won't hold this up. And I think holding up one little page doesn't do it justice. 'Cause in there, it's a lot of stuff, but it's signed. Thank you. This bill is a great victory for the American people. Instead of a bloated and wasteful omnibus monstrosity full of special interest handouts, we've succeeded in passing a fiscally responsible package that actually cuts wasteful federal spending while supporting critical programs for the safety, security, and prosperity of the American people.
The partial shutdown ended February 3rd after the House passed the package 217 and 214 and the President signed a $1.2 trillion spending bill into law. Most federal departments are funded through September 30th, 2025, while DHS funding is extended only through February 13th. 10 days. Quite the negotiation. This sets up the next funding cliff and brings us to our direct Quant Trade Talks takeaway. The federal administrative machine is back online, which matters for grant processing, procurement styles, permitting timelines, and agency throughput. The boring plumbing that turns authorizations into contracted dollars. When shutdown risk rises, SRF and WFIA processing approval slow. When it ends, backlog clears and the financing conveyor belt restarts. EPA previously announced $6.5 billion in addition to $550 million in available WFIA capacity and additional approved loan activity. Pipeline is real, money wants projects. IJIA water allocation remains the scale anchor, $50 billion over 5 years across SRF and targeted programs, things like lead, PFAS, and contaminants. This is baseline demand for pipes, treatment, engineering, and compliance. This policy restart favors regulated utilities and infrastructure suppliers whose demand is appropriations plus compliance plus failure driven. American Water Works, Global Water Resources, they have rate-based capex. These are just examples from our watch list. Things to watch in the future. February 13, 2026, the DHS funding cliff, essentially funding for the Department of Homeland Security, will have to be renegotiated all over again. This creates a new negotiation risk window. We also have September 30th, 2026. Most federal funding in this package runs through fiscal year end, so watch for late year obligation rush behavior.
Breaking news right now, speaking of busted pipes, for more than 1 million people across Montgomery and Prince George's County, right now everyone who uses WSSC water is being asked to only use it for the essentials. And we want to be clear here, the water is safe to drink. You do not need to boil it before you use it, but they are asking you to do this to prevent a boil water notice while WSSC water continues to work on broken water main breaks and leaks from the winter storm. People in D.C. are not impacted, we're told. Matt Gregory is tracking this for us in Clinton, Maryland. Matt.
We're going to be checking with Prince George's County officials to see where they are in the process of getting roads clear. We're also checking Montgomery County officials as well to find out. But the big headline today, as we're digging out, is this order from Washington, from WSSC about keeping essential water use on the table as opposed to boil orders or your normal water use. They said make sure it's essential, no excessive flushing, excessive use of water. This is a time to conserve because there have been so many little water main breaks because of these low temperatures. So that's something to really keep in mind as we're getting into the afternoon and into tonight, especially as the temperatures are going to drop. I mean, right now, as we've been speaking, if the microphone is picking up any wind, there is a breeze that feels like it's bringing with it some Arctic-esque temperatures. So we'll see how that progresses into tonight and then into tomorrow. But for now, in Clinton, Maryland, I'm Matt Gregory. Back to you.
Yeah, Matt, it sounds like WSSC officials are trying to make or get ahead of what could be a worse situation. I mean, they're dealing with 33 breaks and leaks now.
While D.C. debates funding, the real demand engine shows up in the field. System breaks and spending become mandatory. In the Mid-Atlantic cold stretch, utilities recorded large break volumes. WSSC cited 190 water main breaks and leaks during this event window, and a seasonal tally of 901 breaks and leaks since November 1st, 2025. Countries reported their own counts, example, 25 breaks in one jurisdiction. In other jurisdictions, cities logged 60 bursts and leaks in a cold wave, and one utility reported over 110 water main breaks repaired since late January. This is the failure frequency metric you want because it's a direct proxy for replacement demand. Let's discuss some of our supply side constraints. You have aging, brittle mains plus freeze-thaw cycles, which reduce reliable distribution capacity. This is temporary supply impairment. You have demand-side force spend because every break essentially triggers crew hours, materials, emergency contracting, and then rolls into accelerated replacement capex. This is exactly how a Bourne thesis converts into a dollar thesis. Emergency operational expenses becomes rate case justification for capital expenses. Operators with rate recovery and capex candidates, Global Water Resources again has a regulated model. When you talk about equipment, monitoring, and repair ecosystems, Exulum, they have pumps, sensors, and leak detection. You also have small cap break to backlog beneficiaries. These stocks have higher betas, but you have Fuel Tech and 374 Water. These aren't tied to break fixes. These are more so tied to wastewater and treatment compliance spend that rises when system stress and contamination events increase. Over the next 30 to 60 days, we're watching break counts in cold regions. Over here in Maryland, we had an Arctic freeze.
Have to go out. I'm really going to advise you just to stay in because it doesn't take much, less than 30 minutes to get frostbite and even for hypothermia to kick in. And we don't want to see that happening for you. So dangerous weekend wind chills, yes. Right now, 20 degrees is our air temperature, but look at the feel like. Feels like it's only 2 degrees and sustained winds are gusting at 28 miles per hour.
The wake of this nor'easter, you had a lot of cold air that rushed in behind it. And I know we had a lot of snow in the Carolinas, but look at Tampa, Florida.
And temperatures have been freezing for about 2 weeks now. We're getting a little bit of sun now, but you're still seeing cold temperatures and freezing temperatures probably like a day or 2 days after. So that creates significant stress on pipes. We're also watching any shift from emergency repair to replacement award.
Governor Hobbs tells me while she's feeling optimistic about negotiations after that meeting, she says some progress was made, but she does not feel confident that the states are going to be able to come to an agreement before that February 14th deadline. Now, this was the first time the governors from those 7 western states met in person. They were summoned by the Interior Secretary, and it marks a clear shift and shows the urgency in what they need to do to come together to come to an agreement in this this case. Now, leaders in our state are offering to take a 27% cut in Colorado River water, and Hobbs says we just can't commit to more cuts without sacrifices and some changes from the upper basin states. That includes Colorado, New Mexico, Utah, and Wyoming. Now, that seems to be the real sticking point from our state's perspective. I asked Hobbs if she thinks they'll be able to agree to a longer term, a 20-year deal, or maybe something shorter, maybe 5 years or a couple years long.
I think that there was a sense that if we need to get to a short-term deal to get past the deadlines that are in front of us right now, that there's willingness to do that. But I think nobody wants to be in a place where 5 years from now we're sitting trying to figure out the next 5 years. Because the river needs long-term certainty as well. I don't want to be in a position where we have to litigate, but to protect Arizona's Colorado River water users, that is a step I'll take if we have to.
Just for perspective, the Colorado River provides about 40% of our water here in Arizona. 40 million people in the U.S. and Mexico use it, including hundreds of thousands of acres of farmland. And about 1/3 of our Colorado River water goes to cities and towns like yours. I've been talking a lot with some of the water experts at ASU who tell me that could eventually possibly lead to higher water bills for you in the future and maybe some stronger messaging from your water company on conserving. So going forward, we know that the negotiators for all of these states will continue to talk and continue to try to come up with an agreement themselves so they don't have to rely on the feds, which again is something that at least our state leaders would not want to resort to.
If you've seen our video in the past, you see we discussed the Colorado River Basin.
Well, we make the argument that paying people to temporarily leave their water in the reservoirs isn't a long-term solution. The only long-term solution is to retire demand. Most demand comes from agricultural use, 70 to 80% of demand in the Colorado Basin. And so the solution is voluntary retirement of agricultural lands. And we argue that the federal government needs to take the lead with this.
Retirement's a nice word for reductions.
Yeah.
And all of the drama and tensions going on between all of the states determining who's going to use what amounts of water from the Colorado Basin. Negotiations move toward the February 14th deadline, and leaders openly acknowledge that they may miss it again, even as they describe quote-unquote progress. That's not a bearish water signal, it's a capital pressure signal. When agreements stall, the probability rises that the federal government imposes a management path. This historically leads to formalized conservation requirements and infrastructure investment. When you look at the reality of the supply side pressure, post-2000 Colorado river flows average roughly 12.4 MAF versus long-run expectations near 14 to 15 MAF, a persistent 15 to 20% structural gap that doesn't revert quickly. When you look at demand in dollars, scarcity doesn't just cut usage, it triggers spending on metering, reuse, treatment upgrades, conveyance optimization, and long-horizon supply planning, the exact mix that expands engineering and service backlogs. Companies on our watch list include delivery and modeling and program management companies such as Tetra Tech, TechStack for measurement and efficiency like Exelon. Also, we're going back to our global water resources, American Water Works, regulated operators. This is because rate-based narratives strengthen for water utilities broadly when scarcity makes resilient spending politically defensible. Key dates to watch, of course, February 14th, the deal or no deal moment. If missed, then what we're going to watch is federal direction signals. So the federal government say, hey, since you guys can't figure out, we're going to step in, we're going to put deadlines on when this has to be decided. These are key things to watch, as well as any movement on the Bureau's post-2020-26 process milestones, alternatives, EIS candidates, etc.
They're called forever chemicals because they break down slowly over time and can build up over time. Now they've been found in our food, drinking water, even in the blood of humans and animals. Because of this, Congress amended the Safe Water Drinking Act of 1974. States have been given until 2031 to put PFAS testing in place and get a baseline of reports. Take a look right here at your screen. Georgia has been testing for PFAS since 2021 and has this interactive map which shows drinking water and facilities along with their results, which you're looking at. The orange dots show systems that are above the accepted level. Two Richmond County drinking water facilities have been found to be above the maximum accepted level. The county addressed this in the 2024 drinking water report and says it's working to find solutions. To South Carolina, where it's tested for PFAS from 2020 to 2023, finding more than 100 public water systems over the legal limit. However, the state is currently working to get the testing in place to comply with federal guidelines, according to the Department of Environmental Services website. We have reached out to learn when the state will have that in place. And South Carolina does have free testing for private wells in place. The EPA doesn't have jurisdiction over private wells that serve less than 25 people, meaning states don't test private wells for PFAS or other chemicals without the well owner asking them to.
PFAS remains one of the cleanest scheduled demand engines in the thesis. Litigation advances with final briefs due March 6, 2026, keeping the rules faith in formal process rather than being instantly unwound. Meanwhile, the underlying compliance timeline still matters. Multiple trackers cite testing deadlines by 2027 and meeting standards by 2029 under the drinking water framework. This means utilities must plan capex and procurement well ahead of enforcement windows. PFAS compliance spending is not optional demand. It's policy-driven, and it shows up as treatment installs, monitoring contracts, residuals handling, and ongoing operations and maintenance. Even if deadlines are debated, procurement lead times force early moves. Key dates include March 6, 2026, PFAS litigation brief deadline. This is a clarity catalyst. 2027 to 2029 are important windows because testing and compliance referenced by major trackers watch for procurement waves well ahead of those dates. The window from April 13th to October 13th is a PFAS reporting window and is separate but related regulatory pressure, referenced in PFAS regulatory coverage.
Buy your gold and silver over the weekend. You know, we've had this big correction. We typically have rallies on Mondays. We've had a lot of noise recently, but I think we're going to get back to the same trajectory that we were on before, where we get strength coming out of Asia because that's where the real buying was. It's hard to imagine. I'm now saying that it's cheap to buy silver below 80, but it's been as high as 120. So seems pretty cheap given that we now have a benchmark that's much higher. So we're buying silver below 80 and $5,000 gold. 5,000 is the new 4,000. 4,000 was the new 3,000, which was the new 2,000, right? The milestones keep moving up, but you got to keep paying up because this is what happens when you're living in a world of inflation and de-dollarization.
Metals just gave us a textbook liquidity lesson. After a historic sell-off, gold and silver rebound sharply. Gold back near 5,000 an ounce, silver printing 79 an ounce in various reports, with rebounds on Friday ranging from 5 to 10%. This whipsaw is driven by leverage positioning and margin mechanics, not a sudden change in long-run scarcity. If you follow us on X, how we typically frame it, metals are still the confidence hedge, but price action reminds you leverage creates air pockets. Water doesn't care about leverage. Pipes breaks and regulators enforce. Demand stays real.
Think about that. Even if the price of uranium doubles or even triples, the utility company has basically zero reason to shut down the reactor. It's just a tiny slice of their overall budget. All right, so we've established this incredibly predictable, rock-solid demand. Now let's flip the coin and look at the other side of the equation, supply. And this is where the story gets really interesting, because the supply side is, well, it's the exact opposite of flexible. You can boil the whole problem down to some pretty simple math. Every single year, the world's reactors need around 185 million pounds of uranium. But all the world's mines combined, they only produce about 135 million pounds. That leaves this huge 50 million pound gap that has to be filled from somewhere. And this isn't some one-off problem. This is a permanent structural deficit year after year.
Now uranium. The strategic side of the real asset stack stays active. One major uranium research note highlights spot returning to triple digits in early 2026, and broader coverage points to structural supply-demand tailwinds tied to security policy and utility contracts. The DOE also announces a February 3rd initiative involving Hanford facilities tied to nuclear fuel capability, another signal of industrial policy supporting the nuclear supply chain. We stay constructive on the upstream supply chain and fuel security theme. From a quant trade talk lens, it's strategic demand and constrained supply.
Growing concerns tonight as wastewater continues to pour into the Potomac River. We first told you about the pipe collapse near Claire Barton Parkway and 495 last month, and crews still have not been able to fix the issue.
Researchers from both the University of Maryland and the Potomac Riverkeeper Network released research this week. The water is contaminated based on their sampling method and size. The University of Maryland tested its samples at the end of January. The samples tested found bacteria and E. coli 10,000 and 1.5 times above the EPA recreational water quality standards at its different testing sites. At this time, DC Water says just over 420 million gallons of sewage has overflown.
This morning, raw sewage continues to pour into the Potomac River. DC Water now warns that repairs could take 6 more weeks. Fox 5's Bob Barnard is in Cabin John with the latest.
This environmental crisis has been going on for more than 2 weeks now. DC Water is telling us it may be another 4 to 6 weeks before they can get the 72-inch in diameter, 60-year-old ruptured sewer line repaired. From Skyfox, we could see large pipes pouring liquid into the canal. Later, from the towpath, you can see the raw sewage flowing along the C&O Canal, in this case through Lock 10. They're testing along with the University of Maryland, showing all kinds of fecal-related bacteria are getting into the Potomac, E. coli and MRSA that causes staph infections.
Basically, anything that you find in raw sewage, whether it's pathogens, bacteria, or parasites, is now in the river when you talk about 300 million gallons of sewage, right? In addition to that, the river is at drought stage right now. The river is some of the lowest levels we've seen in 30 years.
Last week, when we were aboard the D.C. Fire Department's ice cutter, the crew told us they could tell, looking through the ice, the color of the Potomac River was different. The Riverkeeper's Dean Now-Yox says he's surprised no alarm has been sounded by local health officials.
Yeah, we're really not happy about this, and just the fact that this could last for a very long time.
Tonight, the D.C. Department of Energy and Environment is warning the public and your pets to stay away from contact with this water, but that D.C.'s drinking water is safe.
We got another update. The Potomac sewage spill remains an active validation point, not a closed headline. Follow-on disclosures confirm hundreds of millions of gallons of untreated sewage released due to failure in agent interceptor infrastructure, with sections exceeding 60 years in service life. Environmental testing continues to show elevated bacteria levels, keeping regulators, municipalities, and operators engaged well beyond the initial emergency response. This matters because post-incident phases, remediation, monitoring, reporting, and permanent replacement typically dwarf first-week emergency repair costs. From a supply-side perspective, the spill temporarily impaired usable river capacity for recreation and downstream intake risk management, increasing operational complexity. On the demand side, this event forces incremental capital allocation into wastewater conveyance upgrades, redundancy, and real-time monitoring. While early emergency OPEX estimates were in the $5 to $10 million range, historical analogs show replacement and resilience capex often scaling into the hundreds of millions once full asset condition assessments are completed. For the Watership thesis, this is a textbook failure to funding conversion. Utilities like DC Water operate under regulatory scrutiny, where high visibility environmental failures materially increase the probability of rate-supported capital programs and accelerated project timelines. On the watch list side, this reinforces exposure to operators and suppliers tied to wastewater conveyance, treatment, and monitoring, including Exelon, who has sensors, pumps, and analytics, as well as engineering execution partners such as Tetra Tech. Over the next 30 to 90 days, publication of root cause assessments and interceptor replacement scopes will be things to watch with the Potomac. Quarter 2 to Quarter 3 2026, you have budget amendments or board approvals tied to permanent conveyance upgrades. You also have ongoing updates from the EPA and local enforcement actions that can essentially hard lock timelines and funding. Across every story in this episode, shutdown resolution, system failure, basin scarcity, PFAS enforcement, and metals volatility, the same signal is repeated. Capital flows most reliably where spending is forced. Water remains the highest confidence expression of that reality. Uranium follows as strategic infrastructure. Gold hedges the system. Silver trades the edge. This validation cycle reinforces that hierarchy. Nothing here invalidates the Watership thesis. The pressure remains on. Thanks for watching. Have a blessed start to your week.